How's it going, everybody? It's Stas here. So the stock market was a roller coaster ride today. S&P 500 down $30, down about 1%. The Dow Jones was green, somehow closed green, up $10, up 0.04%, pretty much break even, with the NASDAQ tech stocks in general finally seeing a pull down. NASDAQ down $230, down about 2.16%. Netflix, Microsoft, Google, Facebook, Amazon, Apple, all seeing pull downs. And in this video, we're going to be talking more about the stock market, taking a look at the indexes here, breaking down some technicals, going over what could potentially be happening here in the next couple of days. Are we pulling down? Is this the start of a bigger sell-off? Or is this simply a pull down before we start rallying up again? And as always, we're going to be breaking down the top stocks that I'm looking to trade as we're getting deeper into July of 2020. So if you guys find value in the video, as always, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to join our Discord chat, Facebook group. Both of those are free of charge, and you can get 2 free stocks from Webull valued up to $1,400 by simply depositing $100 into the account, and that is also linked right down below in the description box. So let's start off today's video with the S&P, and let me tell you guys, today was very, very volatile. And before we even get into it, let's take a look at the VIX. The VIX is the volatility index, and it's also known as the fear index. So when people are fearful, when the markets are taking a massive drop, that's spiking the volatility, and hence the VIX goes up. And today the VIX was up $5, up almost 18%, which is unbelievable. And it's warranted, because take a look at what happened here with the S&P 500. You'll see in a second with the NASDAQ and the Dow. We were coasting, guys. We were coasting pretty much all day. We saw a gap up from 3185 on Friday. We gapped up to 3200, and we coasted pretty much all day up until 3230. And guys, did we not talk about 3230, 3220? We've been talking about this level on the channel. You guys can see back in, let's see, I think it was in the middle of June. Actually, yeah, beginning of June, we topped at about 32.20 to about 32.30. We sold off to 29.60, and we've been tracking these levels on the market, right? And ever since, and we talked about this yesterday, ever since we took out 31.80, I was telling you guys, it's a high likelihood the S&P is going to fill up to 32.20, 32.30 before either breaking out or seeing a bit of resistance, either consolidating and either rallying up from there or dumping. And you guys can see we pretty much hit 32.30. We cooled, hung out there for a little bit, and pretty much dumped right away. And you can see that on the intraday. We hit 32.30. We hung out for about a minute or two, and this thing ended up dumping very aggressively. And this is when the VIX started to spike, and we can see the S&P fell $80, guys. This is no joke. $80 in the last 2 hours of trading, from about 1:40 Eastern Standard up to 4 p.m. Eastern Standard. This thing lost $80, which is unbelievable. So a couple of key levels here that the S&P broke, and at this point, it's not like this is a home run for the Bears or for the Bulls. It's kind of in neutral territory. If anything, I'd say the Bulls still have the advantage here. We can see that 31.80 broke. That was not good for the Bulls. That was a pretty big old resistance from last week that the Bulls needed to hold as a new support. The Bulls failed at 31.65 as well, but a key level that the Bulls are holding is right around 31.55. You guys can see 31.55 was that resistance back in the middle of June up till the end of June roughly, and the fact that the Bulls are holding that level, as well as the overall uptrend on the 4-hour chart still, which is the 6-month chart. As you guys can see, the Bulls are still holding that. That is a good sign, as well as this overall 50 SMA. So for tomorrow, for more downside, I'm looking at the futures, in the morning, pre-market, large caps pre-market, and B, I'm looking to see if those futures, if the S&P in general takes out 31.55. If that happens, we're likely to go down to 31.20, guys. That's right where this trend meets, right on the 4-hour chart, the overall uptrend, and it's also right where that 50 SMA is on this 4-hour chart as well. So I'm thinking it's likely the S&P, if it breaks 31.50, 31.55, we go down to 31.20, and from there, that is where it's going to be tricky, because if the bears take over 31.20, that is where I can see a further rundown in the markets, maybe back down into the 3,000-ish area. And it really does depend, quite honestly, guys, and I've been saying this on the channel as well, it depends on big tech. We have big tech earnings coming up over the next couple of weeks. Earnings season in general is coming up now. We have banking stocks starting tomorrow, reporting. We'll talk about that in a couple of minutes here. And it depends, because these big stocks, the FANG stocks plus Microsoft, they make up about 20% of the S&P. So if we see another big gap down in the tech stocks, the NASDAQ takes a hit, it's likely we're going to be going lower, because, again, these tech stocks, not the S&P, the FANG plus Microsoft, they have such a heavy weighting in the market, and in the overall market. So let me know what your thoughts are on that down below in the comments section. I would love to know. And when it comes down to the Dow Jones, guys, very simple. We failed out of 26,400. We actually did break out of it, big resistance momentarily, but just like the S&P, when we started to sell off aggressively, the Dow ended up losing about 600 points. We were at 26,600. We ended up closing right around 26,000 flat. So we lost 600 points, getting us right under that big resistance at 26,400 again. And at this point, we're right back in that range. Nothing too crazy. We're trading between 25,800, 26,400, so right in that 600-point window. And I'm going to be watching what the Dow does there. But ultimately, it seems like we're above main moving averages, which is good for the bulls. We're above this double bottom pop here, which is also good for the bulls, around 25.2. It seems like the momentum is still with the bulls due to this, gap out of this, this wedge you're seeing here. So at this point, we're going to have to give it some time and see what it does. But ultimately, if we take out 25,800 on the bottom, that is where I can see the Dow going even lower. And when it comes down to the NASDAQ, guys, finally, we're seeing the pull down, and we even hit $11,000 today, which is incredible. All-time high, $11,069.26 here. And with the EMA break on the 4-hour chart, it seems like we might be going down to my price target on the NASDAQ being around 10,200 to about 10,300. And mind you, that's going to be putting us right at the 50 SMA, this green line on the 4-hour chart, which has been a support over the past couple of months here on the NASDAQ. So I wouldn't be surprised, quite honestly, guys, if we did see another little pull down tomorrow or the next day. Not saying we're going to crash, but I wouldn't be surprised, because it does seem like the NASDAQ and tech in general, it seems like they have a little bit more to give. They have a little bit more to drop before making the decision of whether or not they're going to rally up again or drop even further. So those are some thoughts there on the NASDAQ. We got some news about the vaccine from, I believe, Moderna this morning. I haven't been keeping up too much with that, to be completely honest with you guys. I know that last week we got some good news from what was the company called? It's slipping my mind now. NVAX, Novavax, NVAX. Let's see how they're doing. But ultimately, this is what the market is moving on these days, and it's very sensitive, the market. It's vulnerable. volatility can spark at any second because we're seeing a potential second wave starting of this CV. I believe today California is reclosing a lot of movie theaters, restaurants, indoor dining. So, I mean, the scare of this potential second wave coming, maybe another closing of the economy, I mean, this is scaring the markets a little bit. This could be fueling it, as well as bank earnings are tomorrow that might not end up being so good. And speaking of earnings, guys, let me know down below in the comments again, what are your thoughts on the market, stocks in general, S&P, Dow, NASDAQ, tech stocks? Let me know down below. And speaking of earnings, we have a lot more than just the banking stocks, right? We have JP Morgan, I believe they're tomorrow. JP Morgan was actually up 1.4% today, up $1.40. They report tomorrow, and I think it's before the market. Yep, before the market. So this could be a pre-market runner, maybe in the right when the market opens, it starts running. So watch JP Morgan. Bank of America is also reporting. BAC, I'm not sure if they're tomorrow. They might be on the 16th. Let me double check that. Yup, on the 16th, they're also pre-market. So I'm watching BAC, and in general, this whole week, I'm watching the banking stocks. And another big one here is Wells Fargo, WFC. They're reporting, I believe, tomorrow as well on the 14th, pre-market. So it's going to be pretty crazy tomorrow, guys. I'm telling you, this is going to be crazy. And we've been talking about this as Q2 earnings roll in. We get to see the numbers from the core of this crisis, because a lot of the damage was done in Q2, and we're going to see how bad it really got with a lot of these companies. So WFC, another one is Goldman Sachs, I believe, is reporting on the 15th. And when it comes down to a healthcare company, United Health Group is reporting earnings on the 15th, pre-market at 7:45 a.m. Central Standard Time. We also have Delta, an airline company, DAL, reporting earnings, I believe, on the 14th. So they're also reporting earnings tomorrow, as well as J&J, which we'll get into here in a couple of minutes a bit deeper, and the streaming giant Netflix, ticker symbol NFLX, which hit almost $600 last week. We're seeing a bit of a pull down 4% today. They're also, they're reporting earnings on the 16th, which I believe that's Thursday. So this week it's starting to get interesting with these companies, and I'm very excited, guys. This is the fun time of the stock market, earnings season. It's always fun. It's always a fun time, especially if you're trading the market in and out. So let me know down below, what earnings are you guys watching? And we typically would do a trading update here, but quite honestly, I didn't do anything today. I bought some stocks in my long-term accounts, a little bit of my Roth IRA, a little bit of my M1 Finance account. I bought in because I'm just buying in dollar cost averaging over time in those accounts. Those are long-term accounts. And just to give you guys what I bought, let me just double check. I bought some Starbucks in my M1 Finance account. I bought some, I'm just pulling it up right here, guys. I bought some more McDonald's, I bought some AbbVie, and I also bought some Altria. And mind you, this is a dividend portfolio, nothing crazy. I mean, I have some growth stocks in there, but mostly dividend plays. So other than just buying a little bit in my M1 account, buying in my Roth account, I just rode my positions that I had. I'm in Workhorse Group, guys, WKHS. This thing ended up rallying pretty aggressively today, up to almost $18 during the market. Pre-market it got to $18, but ended up still holding it. I'm in at around $16.40, I believe, is the average cost. So I'm holding on to Workhorse Group. And Virgin Galactic, guys, did very well today. Oh my goodness, it was up to $21. And it ended up selling down to $17. This goes to show how volatile this stock is. It was up 10% about. Now it's down 6%. And I was riding options that were actually up. I didn't sell out or anything, but they were up pretty aggressively today. I think they were up to about $3.50 per contract. Now I'm checking my Webull app. They're actually down to about $2.30 a contract now, and these are the January 15th, 2021 $35 call options. So I was in those. They were up a lot today, but I didn't lock in my profit since I want to hold them a little bit longer. And other than that, guys, I'm not really in anything else at this point. I mean, I'm still holding cash pretty aggressively in terms, or kind of waiting for this instant that we're in, because now we're seeing the markets pull down. We'll get into some stocks here in a couple of minutes that are seeing pull downs, and this cash that I have could go to good use. And let me know what you guys did down below. Now let's start to talk about some stocks that I'm interested in buying right now that are finally starting to see some weakness. And me personally, as a swing trader mostly, I love buying into the weakness of stocks. So Pepsi, PEP, actually just reported earnings today, and they reported pretty good numbers. They reported EPS of $1.32 versus the $1.25 estimated, and revenue came in at $15.95 billion versus $15.38 billion. So they beat on EPS, they beat on revenue, and their revenue is down slightly year over year, which is expected to be expected due to the time period we're in right now. Their revenue last year, Q2, was $16.45 billion. So year over year, they're not seeing much growth there, but again, it's to be expected, right? Although Pepsi is a conglomerate business that hasn't been too affected too much, I'm sure their sales, and we'll talk about it in a second here, they were affected. You can see here, well, you can't see it on the screen. Actually, you can if you go to the live news tab here. You'll be able to see all this stuff. You can see that North American beverage revenue was actually down 7% year over year, and Latin America beverage revenue was down 17% year over year. And you can see some more statistics around that. And they're not just going down year over year. I mean, in some categories, they're going up. As you guys know, they don't just sell beverages, they sell a lot of snack foods. I mean, you can see here, let's see, I think they're Frito-Lay. Yep, Frito-Lay North American revenue was actually up 7%. Quaker Foods North American revenue was up 23%. So some segments of their business are down year over year, but others are actually up a decent amount year over year. It's just, it's kind of mixed, right? So at this point, Pepsi was down a decent amount. I mean, we were up to about $140. Now we pulled down to $134, and it seems like on a short-term basis, especially if we pull up this 5-day, 5-minute chart, it seems like we're holding the uptrend. I mean, we don't really have enough data quite yet. We'll have to see what happens tomorrow. But if we end up holding generally here $134, which is an old resistance if we're looking back here from the 7th of July up to about the 10th of July. If we're able to hold that, and it was also a support back in the beginning of today at 9:20 a.m., I think we'll have no problem filling the gap up to $140, $139, $140, and maybe even taking that level out, especially with the pretty strong earnings report that we got today. So I'm liking Pepsi here, ticker symbol PEP, on this pull down. If it's able to hold $134, $135, I think that could be one of the easiest plays in the market, especially with it being a pretty stable stock. But always, guys, do your own due diligence, do your own research. Do not buy anything based on my opinion. And we're seeing a bit of a pull down here on Disney as well today. DIS down 2.6%, down $3.12. And this could be because they're actually closing Hong Kong Disneyland, as they're seeing a resurgence of CV cases there. And this is actually going to go into effect. They're closing it as of July 15th. And despite this, guys, some of the major banks, Goldman Sachs included, they're still remaining bullish on Disney. They're still maintaining a buy rating on Disney. And although we don't take analysts' opinions, fully as fact, we always take them with a grain of salt. It's a good sign to see analysts having buy ratings on stocks. I mean, it is a good sign at the end of the day because a lot of people out there, they view this and they simply buy based off of analysts, which at the end of the day, if more people are buying than selling, it's going to push up the stocks. So you have to take it with a grain of salt, but either way, it is a pretty good sign. And we're seeing a pull down from 121 down to about 116. That opened up a 4-5% window there. So I'm watching it and seeing, okay, is this going to be an easy bounce back play on Disney? You know, if we're holding 117 tomorrow, maybe 118, this could be an entry point for that rally up to the 120s and maybe into the mid 120s, depending on if we get into this overall channel, the uptrend channel on the 4-hour chart that you guys are seeing. I think if we take out 121, 122, we'll be back in this channel to the point where we might try and test the highs from back in the middle of June when we were back towards 130 to about, right around 130. So watch that for Disney. And J&J, like I said earlier in the video, they're reporting earnings on the 16th, and we're seeing a big bullish move here as we're breaking out of the overall downtrending channel on the 4-hour chart. Notice how it's clearly been trading in this channel. We hit 137, big support from a couple months ago, also the bottom of the channel, and we rallied from there. And recently we took out the resistance of this channel right around 142, which was also a big resistance from back in March, back in April as well. And we also took out the 180 SMA. So this is very bullish, guys. We went up to 147. We pulled down to 145. Seems to be holding here at a higher low. So I'm thinking win level. That's where I'm looking at here. And if they report good earnings, strong earnings, we might take that out and start going back into the 150s. So overall, I love J&J here as a trade. I've actually been averaging in my long-term accounts as well in this one, as I think it's not crazy. It's not crazily undervalued by any means. It's not overvalued, I think. It's kind of at a decent value to the point where I think the shares here offer some good value if you're looking 10 years out and, in a long-term perspective. So I've been picking it up. I think it's a pretty good stock. And Square, finally a big tech stock here, it's in the tech world, finally seeing a pull down from 136. We talked about this level down to about 118. It was a resistance from back on the 2nd of July. Also, it's right where the 50 SMA meets here on the 4-hour chart. So this could be a dip buy on Square, guys, no doubt about it, especially if we hold 118, head into the 120s. That is where I'm looking to buy. But if we break 118, gap down, we might be going lower. The next big support I'm seeing is around 113. If we take that out, we might be going down to, let's say, 107, 108. So keep an eye on that. But ultimately, after hours here, it seems like Square is consolidating. So although, again, like we talked about earlier, the NASDAQ might see a pull down, or a further pull down, at the end of the day, it might not, right? This could be the only pull down it needs before rallying up even further. That's kind of how the markets have been moving. People have been viewing these tech stocks, these big, massive, tech plays as safety nets. It's insane, guys. And not saying they're not safety nets, but all I'm saying is people might start buying up this dip. And it seems like they've been buying up every single dip here recently. So I'm keeping an eye on Square there at $120. And how could I go a video without talking about the electric vehicle stocks, guys? Tesla hit today $1,800 almost. It was up 16% on the day. Well, not on the day. At one point, it was up 16%. It closed at $1,530 on Friday, almost hit $1,800, and now we pulled down all the way to $1,490 at the close. So you're telling me this was up 16%, and then it ended up going down, swinging down 20% to close the market. That is unbelievable. I mean, this is really real life, guys, and this is blowing my mind. I'll be the first to tell you. If you told me that Tesla would be almost $2,000 a share, even like 2 weeks ago, I would have thought you were crazy. I mean, this thing literally, guys, 2-3 weeks ago was $1,000. So let me know in the comments. Do you guys think Tesla's in a bubble? Do you guys think NIO is in a bubble? I'd love to know. Do I think they are? No, I'm not going to say they're in a bubble at this point, but I think they're just getting a bit overheated. Let's just put it that way. But today, with this pull down, this is a very good sign to, get rid of some weak hands, maybe some profit takers. And now we're going to see if people start buying up this dip at 1,400 on Tesla. I think people are. So I'm going to maybe, I didn't buy yet, but I might end up picking up some shares tomorrow. NIO as well, guys. NIO ended up hitting 1640 today, and it saw a $3 haircut. Now it's at 1350 after hours. We might be going down to this 50 SMA on the 4-hour chart, right around 1160, 1150. That could be a very good potential buy here on this stock. And another one today, Cheesecake Factory. Last I checked, never mind, guys. Last I checked, this was up to about $22, but oh my goodness, take a look at this. Volatility at its finest. It opened up at 22, down to 2080, up to 22.25, back down to $21. So watch this for maybe a swing back up to 22 tomorrow, maybe 22.50. I think that's possible. If we repeat something like this today, maybe make it into a W, right? Because if we rally one more time, that's a classic W pattern. So watch that. Watch out for that here when it comes to Cheesecake Factory, ticker symbol CAKE. And we can go all day, guys. We can go all day talking about stocks. I mean, you guys know that, but I don't want to drag this video too long, so I'm going to wrap it up there. I mean, some other ones are maybe Shopify is taking a big pull down here. Nvidia is taking a pull down. So these are the hot stocks out there, the very hot stocks that are pulling down that might continue to rally. So keep an eye on these. If you guys enjoyed the video, hit that like button for me. Consider subscribing to the channel, and let me know down below in the comments, what are your thoughts on the markets in general, tech stocks, where we're headed forward, moving forward here. Is this a dip buy? Is this a trap? In terms of it can go even further down. I'd love to know your thoughts, and don't forget to claim your 2 free stocks from Webull before you click out of the video. Those are valued up to $1,400. All you have to do is deposit $100 into the account. That's linked down below, and you get your 2 free stocks. I also get 2 free stocks, as it is an affiliate link, and I really do appreciate you guys if you do use that, as it does, I'm losing my voice here, directly benefit me and all the free content that I'm putting up here on YouTube. And again, link down below. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out. How's it going, everybody? It's Stas here. So the stock market